What is up, everybody? We are back for our Tuesday stream. I've got a couple charts I wanted to cover. Obviously, Bitcoin's one that's going to be a popular topic today. I actually put together a little chart. I know we had discussed the Wyckoff accumulation theory on the range we've been in with Bitcoin here for the last few weeks. That's one I want to go over. But if any of you guys got any tickers you want me to take a look at, after I go through these, I'll get to as many as I can with the time we got. Just hit the likes, subscribe, do all that stuff, and we'll get right into it. Let me share my screen here for you. Okay, so we talked about, this range that Bitcoin's been in since back here on May 18th, that last selling climax we had on the drop coming down from the highs. And what I did here is I kind of mapped out all the different sequences. If you follow Wyckoff theory, the Wyckoff method, this is basically, it's the different phases of the reaccumulation. And ultimately, this is, in theory, the composite operator reaccumulating a position after the sell-off, shaking out leverage, shaking out, different traders who are trying to take longs at some of these different spots. And right now, we did talk about it before, and I think we were a little bit early. But I do believe right now we are in phase C, right? Initially, you get this preliminary selling, you get the selling climax down here, you got this wick up, showing there's obviously a lot of buy pressure pushing this asset back up. Which is the automatic reaction. It's a spring up off the bottom of that selling climax. And then we come down and we make our secondary test of these lows. After the selling climax ends, this is phase A. You get your secondary test, which is a higher low, which, if you're using psychology, that would imply there's accumulation taking place. More traders own this asset. And if you were a trader, and you jump the gun on this, you're going to see that higher low, which I did take a position here, but it was a short-term position using these highs as a profit target. But if you were in a leverage position and you just open this trade with no real target in mind, thinking that's the bottom, it's over, we're going right back up, that's where you're going to get shaken out, because once we make this higher high over here, off this lower blue line would be our initial, arguably you could go right here or right up here to this initial wick high. That would be the initial top. And then right here, and then again up over here, you got a wick high going above that. That would give traders the impression that we're putting in a higher high. And as you can see, if you look at phase A here, you got this rounding top distribution, bringing you back down to the lows after putting in that higher high, and then the same thing here. And this is phase B, and traders trying to take a long here, thinking that was the move. We're moving up. That's a trap. You got your bulls trapped here, and then you come back down here and you're putting in a secondary test. The phase B secondary test, which is a lower low. So you got the bulls trapped up here, and now down on this lower low, this is where you trap the bears. The bears see this lower low coming in. They're like, all right, this is it. This is time to take shorts. Only with this piercing line reversal, there was no real divergence on the MACD, but you did get divergence on the RSI and oversold territory, which gave us this nice spring. You got consolidation coming back down, and then you got another spring upward. And at that point, you're back up into this trap zone. This is where, traders are coming in thinking, got to be it. People get impatient. You don't wait for the confirmation. You get stuff like this. And when we talked last, I believe this was the zone we were talking about. And I told everybody my plan of attack. I did buy down here on this double bottom. But my plan of attack here was to wait for the spring above this zone, and then come and get a back test here. Once you confirm that that resistance is support, that would have been a new time, a new chance to take a long position, because you do have easy to identify, risk here, right? If we did confirm this as support, that would, be confirming that what was once resistance is now support, and ultimately you would have stopped out underneath that. But we never got that confirmation. We got this June 16th, you got this bearish engulfing candle bringing us back down into the range. And then you've got this little spring back up. It's break, hook, and go type stuff, right? You come down, you break, you go back up, you hook, you test what was once resistance as resistance once again, and that just opens the door. Especially once we broke this 37 area, that was kind of an area we were thinking maybe this spring will come up, come back test here, and we broke right through that. And once you open that door, you're starting to give the bears, the short sellers, a better argument, and that's where you run into trouble. But not only that, when you get these fake outs into this trap area, you're going to get people shaking out on leverage. Leverage traders, can take a position, get liquidated, and then ultimately it's a waterfall effect. You get people stopping out, you get, leverage liquidations, and then you start getting short sellers pushing that price down as far as they could possibly do it while they still have an argument. Now, once we got underneath, this lower part of the blue range here, that's, this morning, this is when the price fell under $30,000. Everybody thought that the floodgates were open, that we were going straight down to 24. I've heard 20,000, which, mind you, if that's your target, if you're talking and you think that we're going to go back down to $20,000, you have to understand that never in the history of Bitcoin have we ever retested a previous all-time high within a bull cycle. I'm not talking period. I'm not talking, we've never retested lows. Obviously, anyone who went through the 2017, 2018 run at the end of that halvening cycle knows that that's not the case, right? But we don't do it while we're still in the end part of the halvening cycle, which is the 4-year cycle, where the difficulty to mine Bitcoin is cut in half. Yes, cut in half. But this is where we're at right now. This is phase C. If you follow Wyckoff theory, this is what we'd be looking at. And at this moment, we had this price action moving down. We fell under what we thought was going to be support once again. But at the same time, the whole time on this second half of the leg down, you've got the MACD starting to make less levels of negative momentum. Now, you still got the price coming down, but there's less momentum. There's less negative pressure to the downside, right? So ultimately, this is bullish divergence on the MACD. And if you look down here on the RSI, not only did we have it on the MACD, but it's arguable, because you got this low on the RSI, which coincides with the double bottom we put in, and then you've got on this last swing low, you've got the same level on the RSI on both, right? So this is a form of bullish divergence, but it's more of a continuation, a bullish continuation indicator. That's class C. And obviously, we've got this bullish pin bar, which is a bullish reversal. If you follow Japanese candlesticks, you got this massive wick coming up. You got this small body up top, creating this, almost pin bar looking candle formation. But after that, now at this point, this is all theoretical. This is Wyckoff accumulation. This is not me predicting what's happening next. But if this is actual, the Wyckoff theory, if this is how it's going to play out, this is what we should expect. And right now, I mean, it does look promising. This RSI is moving up nicely. It has broken the trend coming down. But not only that, it showed us that bullish divergence on the RSI. We also got, we were also down in excuse me. We were also down in oversold territory on the RSI, which is all the type of ingredients you want to look for to indicate that we would be getting a reversal here. And if you look at this, this bottom we put in here, we were never able to close. We never got a candle close below that line, that historical line back here from the end of March or end of May. I'm sorry. So if this does continue to play out, and seemingly it is playing out pretty textbook, we would expect to see, we got our spring. That's the first thing you want to see. You want to see a spring come back up to this last support line we were at. You're going to come back down. Whether we break that or not is irrelevant. But the thing you're looking out for is the spring up, come back down to back test the spring, confirming the old resistance is now support, the support is still support, if you look at it that way, I suppose. And then from there, we're going to just, work our way up. And this is a 5-point wave. If you know Elliott wave theory, all positive or all impulse waves up are going to have 5 different points. This is just for design to kind of show you what we should expect, right? We're going to come back up. We're going to break some of these resistance points, test the next one, back test, and eventually we're going to work our way back up here to the top of the range. And, we're going to want to see us break this higher range level here. It's probably a better spot to have it there. You're going to want to see that get broken, back tested. You probably see some consolidation, almost, like bull flag action. And then eventually we're going to break the top. But in theory, we're going to break the top of this range. And I like this, first target above this initial range down here, this reaccumulation range. For me, I would be looking at 45. I know we have some other targets on the other chart, but just for the sake of, this, the Wyckoff theory, that's something that you might see. And again, time will tell. It's something I'm going to keep an eye on. I still am being cautious, especially when it comes to altcoins. I did take a position down in this territory down here underneath our support. And if we look left, I think this is what I was looking at. We got a little bit of chop on the way up initially back here in December, and a couple wicks down, through January. So I figured we'd at least get a relief rally, and so far that's what we've gotten. As far as what's going to happen next, that's nothing that we can really predict at this point. Because ideally, what I would want to see, I do like the buy volume we had come in on this daily chart here. We are still holding the range. The 4-hour chart looks good, but on this daily chart, we don't have any signs of bullish divergence on the MACD. On the RSI, you could argue, if you're looking at the RSI, because we have this candle close low May 23rd, and where we're sitting now, you've got a lower low on the price, and the RSI does have a higher low, which would give you bullish divergence on the RSI, which is actually, in my opinion, stronger than on the MACD. But we do have, something I like to look for on the RSI is the same type of M patterns we look for on the price action. If you look down here at the RSI, it's the same idea. You got an X, A, B, C, D structure after, a downtrend, which could imply that that's a momentum shifting structure that would push this RSI higher to the upside into bullish territory, and ultimately we'll see a reflection of that on the price because of the divergence on the RSI. That would be the idea. But it's again, we're still in the range until we break out of this range. And I think I was looking at the top of the initial range to be anywhere from, you know, this 38 to like 41 area. You could even look at this double bottom over here at 42, or this top here, but the 45 is actually a target. I would consider that well out of the range. And this is our daily chart we've got here for Bitcoin. I'm sorry, 4-hour chart. This is the daily chart we've got here for Bitcoin. And this bullish pin bar that we were talking about earlier, that is on the daily chart as well. And not only that, but we've got this horizontal support back here from December, all these wicks we talked about. But not only that, we do have this diagonal trend line coming off of, this is back in the COVID crash, before that, a massive drop and a couple peaks, 1, 2, 3 touches along the way. And where does it line up? Perfectly with this, you know, the support area we have here as well. So that's something I'm gonna keep an eye on. We do kind of have this broadening wedge off the candle close, off this consolidation here. You could call it that. But that's nothing really. Nothing I'm really trading off of. I'm just, you know, that would also give you the impression, which is confluent with the Wyckoff accumulation, that our next target up, if we do move to the upside, is not only going to be our resistance back here, but that would also be the top of the broadening wedge, right? If we did make one more push to the upside, I would expect to get another test of the top of the range. But the MACD, you don't really have much of an edge on just yet on the daily. I wanted to touch on CLOV. Somebody brought this one up to me earlier, and this is one we've had a couple trades on. After this massive blow off top here back on the 8th, we have corrected. And we got this falling wedge formation that we broke out of today. But not only that, if you look at this price action, you got a low, you got a lower low, but at the same time, your MACD is losing negative momentum. You've got positive momentum coming in. You've got volume coming in. You've broken the falling wedge. Not only that, this RSI is doing the snake dance straight up. But not only that, you are on top of historical resistance. So the way you look at it, right, you've got your Wyckoff accumulation of whatever kind. You got your spring, exaggerated because this is a stock that has been all over the place when it comes to socials and Reddit and Twitter. You know, you got this massive blow off. You've got a huge correction. I mean, if we draw a fib on this thing, you've got just the type of stuff we want, man. You've got an 88.6%, even further than that. You got, you know, about 90% correction of this wave all the way down to support. We did take a position this morning on this one, a little bit after open. You know, you got an initial reaction, and I'm willing to bet if we come down onto some lower time frame charts, just the stuff we're looking for, man. You got that initial reaction, you broke resistance, come back down, you test this resistance that was previously support. Let me retry that one. You broke the resistance and you come back down and you tested it as support. But not only that, after that, you just engulf right back up to this support line. You broke that and you're moving up again. You know, you think the target right now, just real quick, is probably going to be 13.14. But if we look back on the daily chart, or I'm sorry, I think the 4-hour chart probably shows it better. You know, the next obvious, the next major swing high is going to be right to 1649, and we're sitting under 13 right now. If you want to be a little conservative here, you could look at 15. You got this wick. You've got this at about 1448, 1450. You got couple candle close highs. You got the wick to 15. That could be the first stop. Because you do have resistance here, and it looks like after that you did test it as support. So that's where I would be looking if we were looking for a target on CLOV. And obviously, if you did break underneath these lows here, that would invalidate the entire thing I just gave. MACD will make it jump. Actually, Mac is in the background. If I could, he's back there somewhere sleeping. So yeah, I mean, ideally the entry would have been closer to the bottom of the range down here. But if you were taking a trade on this, we might come back down and confirm that support once again. You get the reaction, you get the retest. We did see it on the smaller time frames. You might end up seeing it on the 4-hour chart, but with the attention this stock's getting, maybe not. But like I was saying, if you fell underneath that, it invalidates the entire spiel I just gave you. Again, technical analysis is not a predictive tool. These are just levels that traders might use, to look to take profits, to buy. It just gives you an edge in the market. It's nothing certain, but it's better than a coin flip. And the more variables you have that support your argument, the better, right? And again, one of the things I always talk about is doing 3-to-1 trades. You want to get a 3-to-1 risk, 3-to-1 reward to risk, because that gives you it gives you more than a 50% chance. It's not a coin flip anymore, because if you take only 3-to-1 trades, you can lose 2 of them and you're still going to end up being profitable just from the one trade. 6 out of 10 can be loser trades. And the 3 will make up for it, and it'll keep you profitable. And that's a strict guideline I use with all trades. What was the other one I wanted to point out here? Coinbase is one I'm looking at too, because the thing we're looking for, the thing I always talk about is, these levels are very easy to define here on Coinbase, COIN. Let me 1 second. And what I like about COIN here is I like the fact we've got a deep retrace, deep value here. You've got this massive wick, which shows you there's a lot of buying pressure down in these zones, right? Somebody is pushing this asset back up from these levels here at 207. But not only that, you got a deep retrace. You've got this XABCD, which is a momentum shifting structure, a harmonic structure that we look for. And, the thought behind that is after a deep retrace, you'll see these present themselves. And the idea behind harmonic structure, a bullish harmonic structure, which are the ones that are shaped like an M, is that this ushers in a reversal of, this downtrend that coin has been in for pretty much its entire existence, right? We've been slowly making our way down here, all the way up from about 429, all the way down from about 429. It has been a long day. But we're on the 4-hour chart here, and I also like this. Not only do we got this, this same type of wick here once we broke underneath that resistance, same type of wick we had back here, but you've got this piercing line reversal Japanese candlestick that not only that, but you actually, if you look here on this low, at our B point, you got a lower low here on our D, so lower low on the price. And then if we come down here to the oscillators, you've got on your RSI, not only do you kind of got that M structure, right, but you've got higher low on the RSI, which gives you your RSI bullish divergence. But not only that, that's in oversold territory. Same thing with our other bottom down here. So you could look at that again as your spring, your back test, your momentum shifting structure. Not so much help on the MACD. Actually, you could probably argue that this is, you know, class C bullish divergence. You got the double bottom on the MACD, while at the same time you are making lower levels on the price. So this is what I'm keeping an eye on. You know, I wouldn't be completely surprised if we do come to test a little bit lower here. You know, if we did hit the 88.6% retrace, but you know, in a bad, if we did hit an extreme level on here, we could come down even further and hit that 1618. But the argument here is this reversal. Here you got this heavy buy pressure down in this zone. You know, that would, it would imply that this is where it's going to turn around. But I'm going to wait for a little confirmation, a little more confirmation. Personally, I do have a buy order that I did place back here in May down in these zones. But we got a couple of the meme stocks too I wanted to take a look at, which Blackberry is one of them. We did take a trade down on Blackberry here the end of May. Once we broke this resistance here at about somewhere around $9, you got your spring, you got a back test, which, you know, that would have been a spot where traders would have been looking to take a position. You did get an initial reaction there, but it made a lower low ultimately. But what I like about it is, you know, you did have this nice rounding bottom accumulation after a deep retrace. You know, this is the type of structure, same thing, the type of Wyckoff structure you're looking for. And I'm willing to bet if we did the same thing with this chart that we did with the Bitcoin chart, you got the same idea, right? You got this fake out, right? You got some lower lows. You got a retest, you know, above the resistance. Could be considered fake out, right? If you were going by the Wyckoff chart. And then you got that same thing that we saw on Bitcoin this morning. After you get these positive moves up to trap your bulls, to trap, you know, people trying to take a long position on this, it eventually came back down and made a lower low. But if you look where that lower low was, that lower low was right at our, you know, support and resistance levels here. And then you just, from there, it was over. You know, you took off after that. But what I like about this here is if you look at the price action here on Blackberry, same thing we're always looking for. While that price is coming down off of this retrace, you got the deep retrace off that spring. And if you look down here at the MACD, every histogram island on this MACD, every peak down you got, you just keep losing that negative momentum, and now you're starting to get positive momentum. You haven't seen any crazy volume coming in just yet, but I do think you broke this down sloping trend line here on the RSI, which could imply, and you see you got this RSI curling upward. I've got this, actually this is a Wyckoff indicator that, you know, same thing. Look at the spring on that Wyckoff. It's almost a different form of an RSI indicator. So, I mean, it's starting to look like this could be another attempt to test some of these higher levels. And I'm willing to bet, looking at this structure here, you could probably argue you've got your bullish XABCD X, I say that right, XABCD, yes. You got to bear with me today. I am a little bit exhausted, but it looks like you got a little bat. But the same idea. This is, you know, you got your deep retrace, a momentum shifting structure here that's going to push that asset back up to the upside. If we did break underneath these levels that we've got here, this is invalidated. You might come back down and continue testing some of these lower levels. At that point, I wouldn't want to be in the trade. But I know Blackberry is one of the ones that, you know, people have been talking about on Reddit and Wall Street Bets and all that stuff. But I'll tell you what, it looks really, really good right here. And you do have pretty easy to identify risk. If you're looking over here on, you know, some possible targets here on Blackberry, if I don't make you dizzy in the process, I know we got these levels up here at about 21. These crazy levels up here at 25. I don't know if those are historical levels. Yeah, you've got some historical levels up here at 21, 29, 34. But more than likely, I would be keeping an eye on before that, maybe the 1722 ish. Yeah, you got historically, you got a couple tests of that level as support and as resistance. So you might get a retest up there, and that's on the weekly chart. Yeah, if we go to some of these lower time frames, this looks nice. You got this little dragon structure here. And again, you got your spring above resistance. You very well could come back down and back test, but it almost looks like you're kind of bull flagging here, right? And this is low time frames. It's not going to be a big move, but just trying to identify patterns. You know, you might look at something like this for the bull flag, which would put you, if we're looking at historical levels, and you got a wick high here at 1445. You got a candle close. You got a couple other tests of it too. Historically back here, you got a wick, couple wicks here. I would think eventually, if not right away, that's going to be your target. And this is for Blackberry. GME is another one. If we look at it on a bigger time frame here. What's up, brother? Welcome. AMC, I can do that one too. Because honestly, AMC and GME are both looking pretty good. Grant, I'm not gonna offer out any trade advice on these, but we can look at the charts and we can look at levels, and surprisingly, AMC's, it's still holding up. Trying to find a clear view here for you. Right, so if we're just going by wave analysis here, I'll move down to the 2 hour for a little bit more information. Right, you got your run up on June 3rd, came back down to this historical resistance here, or historical resistance at about 43.81. You tested that as support and got a nice spring. You got a confirmation, which at the same time on AMC, same thing we always look for, right? You got your drawdown, you've got a momentum shifting structure, and right off the bat, you've got I may or may not be dying. You know, you got a double bottom on the price, and you did have less levels of negative momentum, and you got your initial reaction, you got your confirmation low, you know, your spring, your back test, and then it was straight up to that next level up there at 63. And you ended up closing underneath that. I think this was had to have been Friday, but you have for sure, you definitely got a pretty substantial supply up here, right? You've got a bunch of wicks above it, but ultimately this 61 mark is where you're getting all the struggle, right? You couldn't close above it over here. You weren't able to close above it over here. And same thing right here, you broke above it and you ended up topping out at 63, or at least closing at 63 there where this wick was. And the same thing, right? I'm just doing this for wave analysis reasons to help you understand what's going on. Same thing. You could probably look at this. I mean, it's nothing textbook, but you got the same thing. You got your drawdown after the rejection. You got a momentum shifting structure, and now you got a spring. If we look at the lower time frames, you got your spring, which is your reaction, and it looks like, oh, look at that. You got this, you had this double top here at about 57.65, and we did manage to spring above that. You got this consolidation going on. But what I like about that, and this could be a bullish indication, right? Because you broke this old support, which was acting as resistance now. You broke above it. Not only did you break above it, but you closed above it, and you are holding it through the after hours. And that's bullish, because I don't think, yeah, I mean, it's been a bit since we've been able to stay above that area. It's hard to give targets on AMC, Brit, but if I was going to look just based off of the wave analysis of a harmonic structure, you know, I would think we're coming back up to at least give a test to, let me see. I mean, you would think you're at least coming back up to test 61 again, and, you know, try your luck with some higher levels there. You do have convergence here. You've got less negative momentum at this low and this low, which is a continuation pattern, which obviously I'm not the only one who saw that, because you do have this giant engulfing candle off this 53 level there. And GME is the same thing. This is one I've been covering for a while. None of this is trading advice. I'm just following the chart here. We did have a couple trades on this one. Back down here, because the same thing that we've been talking about, you know, that you would want to see after this drawdown. You know, you start getting these lows, you got your spring, your back test, you know, you develop these different support levels and resistance levels. But after the drawdown, not only that, you've got, surprise, surprise, you've got a nice bullish shark here. After the drawdown, you get a momentum shifting structure. At the same time, you had, I believe, there was divergence somewhere we pointed out. Was it right here? Regardless, we had this momentum shifting structure. This is where we took our trade. We ended up peaking up here, at least close at 308. And now we're kind of seeing the same type of thing, right? Because we have, you've got this old resistance wick from February 24th that has been respected a few times. 1, 2, as support, as resistance, 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 but we broke above it. We sprung above that old support. And now we came back down, and guess what we did? We retested what was once resistance as support, and you have gotten a reaction off of that. So this does put you down at a deep retrace. It almost looks like you got a little deep crab. Same thing, XABCD, right? After a deep retrace, momentum shifting structure, just for visual reasons here. Let me see if I can make sense of this. Well, not really textbook, but it's the same idea. It's a pattern that appears after a deep retrace. But not only that, it completed right at critical support and resistance levels, and you got your spring. I would imagine if we were going for a target on GME, a reasonable target, just going off the charts, I like that 246 a lot. You've got it back here in January. You've tested it as resistance there, as support, resistance, support, and then same thing. Last time we tested this level was back here. Same thing. What happened last time we tested this level after breaking resistance? Straight up. So I would probably look at some of these levels going up. You know, you're going to run into a little bit of chop on the way back up if it does end up breaking that 246. But at that point, you know, one would think you're going to come back up and test some of these support and resistance levels. 246, 280, 308, and just to put a little icing on that cake for you, you've got lower price. That price is moving down after a deep retrace, deep value. You've got less levels of negative momentum, bullish divergence at a critical ice line after a deep retrace with a momentum shifting structure. And not only that, but right at that point, on the RSI, the last time we were oversold like that was back here in the beginning of May. And you could argue you got, you know, whether it's Class C bullish divergence, continuation to the upside, or convergence, regardless, they're both continuation patterns. You know, that implies you're going to go up. And again, 246, 280, 308. I'll bring up Doge here. Doge. Fran, I agree with you. I do think Bitcoin is eventually going to reach 100K. And many people's theories, including some of the most powerful banks and people in the world, agree with that. And I don't really care that they agree with it. I just know that they can make it happen. But that's kind of the way the halvening cycle works for Bitcoin. You know, at least historically speaking, we always see that blow off top. The end of the year, it's an algorithm that keeps the difficulty of Bitcoin updated as time goes by. And that's a 4-year cycle. Doge is another one. Same thing. This one got absolutely destroyed. You got classic just over and over again, right? We break these resistance, we come up, break, hook, and go. Break, hook, and go. Same thing. We just kept stepping our way down all the way from 34, basically in a move down to about, I think we ended up hitting about 16 cents. But now this is for hopium because we don't really have much confirmation. I did post a chart about Doge outlining this, right? Because we've got, you could argue this is a bigger ABCD, but this is not what I'm concerned about. I like the fact that we've got our deep retrace, right? That's what we're looking for. Off of our highs, deep value. You've got a momentum shifting structure that has hit the 1618. And now This is why we don't really have a whole lot of confirmation here, because while we do have a wick low, literally right where that harmonic would end, and it does look like we have some, consolidation going on. That's, there's not a lot of support, not a lot of resistance, not a lot of information in this zone specifically. It would make more sense to test the top of this 14 or 15. But you got to think, psychologically, people might be expecting that. That's stuff I've seen people talking about 5 cents. We're going to go test 5 cents. Anyone who tells you you're going to go test 5 cents, my opinion, it just doesn't make sense, because first off, if we did end up breaking any of this chop, the next place you're going to go is probably to the bottom of this zone here, which would put you at about 11 to 10-ish, somewhere around there. But then on top of that, you've got the major zone down here that we would be testing if we broke that, would be 7 cents. These 5 cents, whether these are people who are trying to trick you, that just don't know what they're talking about, looking at the chart, looking at the levels, these are the levels that are important. I do like that we have not been able to break lower than this, right? We do have some wick levels over here. Historically, this could make sense to reverse here. What I do like on Doge is from your X point, which when you're trying to identify bullish divergence, you want to go from the candle close. So your low over here, you've got lower level on the price, and we pointed this out before this negative momentum started waning, but you wanted to see that because you've got a lower price, you've got less negative momentum between these two major points. And even if you put it at the wick down for X, same thing, lower price, less levels of negative momentum. We haven't went positive yet, but what I do like is somebody went shopping, right? This is the biggest buy volume on Doge since mid-May, right? Where this big old wick was. And I'm willing to bet if there was that much buy pressure down here, I'm willing to bet this wick down here, pretty much where we're sitting, is going to be a spot where this supply is, either it's going to be absorbed and we go back up, or we could consolidate here and just wick down to 14. Ultimately, originally I took Doge as a trade way back. I think we were around 5 cents. I think we were talking about it at 1 cent too. But this has become less of a trade for me. This is more of a long-term thing, because I do have these little theories about what Elon has planned for Doge. I don't think he has that much, I don't think he's that bored that he just wants to play around with Doge, and clearly he doesn't need the money. So I do think, even if it is just, a little funny thing to him, I do think he's going to do some development on Doge, and I do think this is going to be something that he incorporates into SpaceX, perhaps Starlink, for cheap and fast transactions. And if there is development on this platform, whether it's an ETH portal, which Vitalik Buterin was talking about, he also thought that would be a cool idea. Elon Musk mentioned that. This is something that, I'm just leaving a little bit in the bag. I'm just going to let it go. I don't care what happens in between. If we do test some of these lower levels, I'll just buy lower, because it's just my conviction. I think there's going to be some real good stuff going on with this project. I think there's a possibility, this might be a green energy incentive that Elon offers through Tesla. Same thing that they're doing with Bitcoin mining. If you have green energy, you're now being incentivized with free money to have green energy. It goes beyond the Bitcoin space. It goes beyond cryptocurrency. Now you're talking about an actual incentive for the world, whether it's South America, whether it's Canada, whether it's the US, whoever, you now have an incentive to create a sustainable green energy environment for not only, for obvious reasons with climate issues, but you are being incentivized. This could be something that could be integrated with Tesla's, with the power walls, with Tesla's solar roofing. Kathy Woods seems to think so, and Kathy Woods is also one of the biggest holders of Tesla there is. And you know what? I think Kathy Wood and Elon Musk are pretty smart people. And not only that, BlackRock is also a real big supporter of all this stuff, and Tesla included. So it's kind of my little tinfoil theory for the day. And if anyone's got any tickers, I probably got room for one or two. We are finishing up here at about 8 p.m. But if you guys want to follow me on Twitter at Trade Nomadic, I can even give you a little banner here. You guys can feel free to drop me a message or a comment or something. And I'll take a look at whatever you got. I'm always looking for new trades, and I'll be happy to help. Yeah, there you go. But, this is actually, I really want to bring this one up before we go, because, we saw this crash with Bitcoin, right? This huge crash has been going on. Well, what no one's been talking about is this massive run on the DXY, and this is the US dollar currency index. So the idea being, if the DXY is running up, well, Bitcoin's probably running down, right? So maybe nothing fundamentally changed with Bitcoin, but because it's valued against the US dollar, positive movement in the US dollar is going to create negative movement for Bitcoin, in the same way that negative movement for Bitcoin creates negative movement for altcoins because of their valuation against each other. It's the same idea. But I don't really believe that US dollar should be running up much higher than it has. And if you look, this is a 4-hour chart here. We had this momentum shifting structure after a deep retrace, and you had your spring, your back test, and you slowly stepped your way up to a major vertical or a horizontal resistance. You've got a substantial monthly resistance coming down that got rejected once, twice. You've also got a daily resistance coming down that got rejected once, twice. You have everything working against you to push this asset down. But if you even zoom out, it gets worse, right? You thought we might have had this double bottom going on here. You got rejected. You've got two diagonal resistances coming down, two supply lines coming down, and every time we touch it, it gets rejected. And this is after, mind you, this is on a daily chart, so this is a long time frame. This is what Bitcoin just got done seeing, right? Remember this? I'm sure everybody recognizes this structure now after seeing this on Bitcoin for a few months. This is distribution. This is somebody getting rid of this asset, getting out of the market, right? That's what it implies psychologically. And this has been going on since, about 2015. Oh, look at this, 2017, where Bitcoin started its massive bull run. This US dollar just whoosh, all the way down. The DXY ended up hitting, and this was right around Bitcoin, when Bitcoin started going down. You got this inverted head and shoulders type pattern here. And look at that. Whenever Bitcoin's going up, the dollar is going down, and vice versa. And the dollar has been being. The dollar is got this massive multi-year 5-6 year distribution pattern going on. And mind you, all of these points are right before Bitcoin ran up, right? And same thing, look at this. COVID crash. The dollar is coming down all year while Bitcoin's going nuts. So you would think if the dollar decides to make another move down, and mind you, we are now moving to this is a weekly chart actually. This is the kicker, right? The US dollar, the DXY, all the way from, imagine that, 2008. Could have sworn that 2008. I'm pretty sure that's when Bitcoin first made its debut, at least the project, right? And then you've got the same pattern, just all the way up. You keep getting these peaks that correspond with the dips in Bitcoin. And on this weekly chart, this trend from 2011 that we held all the way till the end of 2020, you have not only broken this trend, we're talking 10-year trend, but you broke, hooked, and went. You tested what was once support for 10 years on the dollar. You tested it as resistance now. And now you've got this broadening wedge coming down off of that, which you would think eventually is going to bring us down to 88. And if we break 88, run like hell from the dollar, because we are going down to 84 next. You might see some chop from some of these peaks here. Actually, that might be, yeah. I mean, once you break through this chop, these are the zones, man. The major zone is going to be down here at 84. This is on a monthly chart. I mean, you could actually come back down, historically speaking, 84, 80 cents. You've got distribution. Remember what happened to Bitcoin? It's a very, very large time frame. It's just something to think about. It's not, I'm not doomsdaying anybody. Yes, Ben Franklin, Bitcoin is a new microchip that everybody should get, in my opinion. But again, the dollar might try to break through this, after it breaks this vertical, or I could get my directions straight. If it tries to break through this, it's still got multiple layers of resistance that it's facing. And I do think we are headed down further eventually. I don't care how long you try to prop it up. It wouldn't make sense that the dollar is gaining strength, at least for the short term. I might have time real quick for ADA, just because I got the chart already, I believe. And Spencer, if you're listening, you cut me off whenever you got to. I know they do got a show coming up next. Just real quick, if you're looking at the bigger structure on ADA, same thing we've been talking about. You've got a momentum shifting structure that seems to be completing here. And not only that, but you do have less levels of negative momentum between these 2 points where the price is still coming down. You do have a bullish, you got a bullish wick and double bottom here, piercing line reversal. You've got massive volume coming in today. So I would think on ADA, $1 was your bottom. Somebody went shopping for ADA this morning. And just looking at, historical price action correlation, you hit that bottom, you get support, you're going straight up to 137, 130, 137. You could make it all the way back up here to 150, no problem. I think if we do get Bitcoin cooperating with us. Go ahead.
I think that's going to be a wrap. We got We got a Benzinga Pro webinar coming up right now. Everyone follow Trade Nomadic on Twitter. Smash the like. Links in description. All that good stuff.
I appreciate it, guys.
Thanks a lot, man.
Thank you. I'll see you next Tuesday.